Hello, Sage here. Welcome to this edition of Hot Performers by Kalkine TV. And in today's show, we'll be throwing some light on why Sigma Healthcare shares are buzzing on the ASX today. So let's begin. Pharmaceuticals wholesaler Sigma Healthcare started today's trading session more than 4% higher after upgrading its earnings guidance to an increase rather than a decline. Shares hit highs of $52.50 Australian in the morning trade, and in 45 minutes to the opening, Sigma shares were up 3% higher to reach $51.50 Australian. Sigma Healthcare, a leading network of independent and franchised pharmacies and healthcare providers across Australia, recently upgraded its earnings guidance for the financial year ending 31st January on account of a surge in demand for a few COVID-19 related products. The healthcare firm now expects its underlying EBITDA to surpass earlier guidance. And although the previous guidance released in December last year expected underlying EBITDA to be down nearly 10%, the underlying EBITDA is now expected to be 10% to 15% up on last year. Sigma Healthcare in December had warned on profits after experiencing problems with the introduction of an enterprise planning resource system at a time when major Australian cities were being locked down to contain COVID-19 outbreaks. The drug wholesaler said it now expects underlying EBITDA to fall by around 10% in the 12 months through January. In September, the company had reported its forecast of 5% growth. However, today's announcement of improved financial performance and underlying earnings impacted on the price of its stock. As a result, the stock of the company rose to 52 cents Australian, up 2% in the early trade today. In the past year, the share price had been down by nearly 23%. And that being said, let's have a look at what contributed to the improved financial performance of the company and how well it fared. Looking at the demand for rapid antigen tests in detail, the company attributed the improvement in the financial performance to the rapidly evolving COVID-19 environment and the sudden rise in demand for rapid antigen tests, also known as RATs. It led to volume growth in the month leading up to Sigma's financial year closing. As per the company's ASX filing, the reported net profit after tax is expected to be on a loss of $5 million to $10 million for the year, largely impacted by the SAAS accounting policy change in the current year. The company also stated that their improved position as a result of the increased demand for the rapid antigen tests has also been partially offset by other costs associated with the implementation of the enterprise resource planning solution and related business disruption, and the impact of their closure of one of their distribution centres in late January this year. Thanks for your company on this report. It's time to wrap up the show. Notably, the company had downgraded its earnings forecast in its December's update on account of impacted sales and operating costs due to a major software update and coronavirus restrictions. But safe to say things turn out to be pretty fine for the firm. The company's shares are trading at 51 cents currently. Sigma's full year results are scheduled for announcement on the 29th of March 2022. Keep watching Kalkine TV for more of the live expert talks and live market updates. This is Sage signing off for now.